Andrew and everybody.
Hi, everyone. Welcome to the show for August 28th, 2017. My name is David Kosmeter, and I'm the creator of Timing Research. Starting this week, I'm referring to the show now as Crowd Forecast News to make it clear that it's related to the report that I publish, and also to distinguish it from the other show that we did a test episode last week. So this is Crowd Forecast News for week number 205. The other show we're calling Analyze Your Trade, and I've been working on that with Dean Jenkins of Follow Me Trades, who's here today to moderate as well. But those are episodes, new episodes of that show are going to start on September 5th at 9 p.m. Eastern Time. So be sure to watch your email for more information about that. So today we will be discussing the 205th weekly report. If you haven't had a chance to take a look at that yet, you should see it on my screen now as I'm talking. And you can also go to TimingResearch.com. Hold on. Wrong window. Should see it on my screen now as I'm talking.
There it is. We got it.
And you can also go to TimingResearch.com and download it there. And I have, as I mentioned, I have Dean Jenkins back to host today, so I'm going to go ahead and turn it over to him.
All right. Well, thank you, David. Thanks for having me back. I always enjoy this show. It's a good time, and it's informative. I always learn something from the panelists. You always get a good group of folks here, very knowledgeable and different approaches. So I look forward to it. So in looking at your report that you published, David, the crowd forecast prediction, you're saying 73% chance higher. That's pretty strong, right? And I was reading through that, and just based on previous data and conditions, based on people's response. So it'd be interesting to see how the panelists align with that or disagree. But we'll be getting into that pretty quickly about what people think, the panelists think about market direction for this coming week. But before we do, let's do a quick round of introductions. So for each of the panelists, just call out your name and take a minute or two and just give a brief introduction so people know who you are, what your service is, what you do. And we'll just start here with Larry Gaines. If you just do a quick intro, Larry.
Yeah, well, thank you very much, Dean, David, for having me here, and guys, appreciate it. Yeah. I'm with founder PowerCycleTrading.com, and it's an educational trading service. What we look at is basically trading price direction with the use of options for leverage and risk management. So been actively trading for over 30 years, ran a pretty big trading desk for a oil trading group for a number of years. So been in the business for a long time, traded pretty much all the different markets. So just a lot of different experience and knowledge for all the various markets. But the thing that I like the most is price direction using options to trade for, risk management. So check me out, PowerCycleTrading.com.
All right, great. Good to have you here again, Larry. We've been on the show together several times.
Yeah,
I look forward to hearing. Yeah, look forward to hearing what you have to say. And yeah, I don't blame you for moving from being a oil commodity trader into options. I sure like options myself. Oil's a wild ride, man.
Yeah.
Next up, Jim Kenney. If you'd introduce yourself, Jim, tell us what you got going.
Sure. Well, we have optionprofessor.com, and basically we've got education going on the uses and the risks of all the different option strategies out there for beginners, intermediate, and advanced traders. And basically I provide all the content for it, and basically it's an educational tool, so there's no trade recommendations, but just basically trying to make sure that the traders understand all the different ups and downs of the different strategies, so when they look at a circumstance, they have a variety of strategies to consider.
All right, great. And I know we've been on here several times together, Jim, and I always appreciate your input as well.
Thanks.
Yeah. And so next we got Andrew Keene. So Andrew, if you'd introduce yourself.
This is the first time I think I've ever been on the show that I didn't get to go first. I'm very upset right now. But Larry got to go first, so that's cool. Andrew Keene, floor trader at the Chicago Board Options Exchange for a decade. Had a very successful career down there, and then I launched my company about 5 years ago. Company's divided into subscriptions and products. We have 10 subscription-based models, the biggest one being a live trading room where me and 4 of my other moderators trade their own capital throughout the course of the day. Have sold over 10,000 courses in the last 5 years, done 500 live webinars, and written a couple books and ebooks on trading. We also have proprietary-based indicators on Thinkorswim, TradeStation, and Ninja. So that's
All
me.
right. Well, all right. Good. Thanks, Andrew. It's good to be here on the show with you. I think we've been on once or twice together before.
I think 6 times, yes.
Yeah. So sorry to have you at the bottom of the batting order. I'm just going with what David published.
And clean up.
Yeah, not a problem. So I'm Dean Jenkins of FollowMeTrades.com. I'm the founder. I started the company about 20 years, about 2 years ago. I've been trading for about 20 years, and I focus on stock and options, and I publish a weekly stock pick, and I run a live trading room. I've got some courses as well that teach the method that I use to trade. I like keeping things simple, so I just call it simple, profitable trading. And again, I do stock picks, training, and we run a live trading room for a couple hours in the morning. So good to be here. I think we got a good panel, and so we're going to get right into the meat of it. And that's the first step here is we're going to forecast each person to give a forecast whether they think the S&P 500 is going to close up this Friday from Monday's open or down, and a percent confidence. Now in round 2, we'll get into your reason for that. You can show a chart or discuss in kind of defend your conclusion. But we're just going to go in the first round and just say, do you think it's up or down, and what's your confidence level? And I always hope that we have a variety of opinions, that not everybody's not on the same side. David's forecast is up, so we'll go around. Larry, what do you think by the end of the week? S&P 500 up or down?
Well, from today's open or whatever, lower on Friday's close from where we are now.
All right, down. What's your confidence level on that?
65%.
65%. Didn't even hesitate. Confident about that. Okay. So Jim, up or down? What's your confidence?
Well, we're looking at the S&P right now at about 2441, and I would say that the market may grind itself higher because of the amount of reports coming out, which obviously we'll get into our answer a little later, and the fact that there is some support and fundamentals that remain intact, and fighting those support levels and those fundamentals have been a rough racket. So I would say that my confidence level is about 50-50. So in truth, I would probably be investigating a strangle, because the VIX is between 11 and 12, and because if the thing does break to the downside, there could be substantial movement, because if these reports come in not as good as people are expecting, that would be a big surprise, and a big surprise can cause volatility. But right now, the answer is a grind higher, and I think that's 50-50.
Okay, so let's see. If you're 50% higher, that means you're 50% lower too, right?
Well, that's where the strangle comes in, right?
Okay, Andrew, what kind of direction you got in mind there? What's your confidence?
Yeah, I think we're going to go higher. I mean, I don't really see much conviction to either direction. Since we made that big tail on the top, on the reversal day up to 24.88.5, we kind of just been hanging out. We really haven't been moving that much in either direction. I'd rather be trading oil a little bit, because that's been moving, but S&P has been very, very weak. And then, when it goes down enough, it gets bought. So if I had to say, I said go higher, because we are still in a bull market. I still think the market moves higher here, and I would say about 55% chance we move higher.
55%. Okay. So we got 2 up, 1 down, and I'm going to make it a tie, because I think we're going lower. And I'm going to give that 55% confidence right now because we're coming into some important support, and I'll talk about that when I show my chart. But the overall bigger pattern, I like looking at for a week forecast. I like the 60-minute chart, and I see a bearish pattern, but some real support potential areas. So I'm down 55%. So we got 2 up, 2 down. And now we'll go back around. This is a chance where you can share a chart or a screen of some kind and get a little deeper into your rationale and why you think that's going to happen. So we'll start back at the top. And Larry, what do you?
Yeah. So
why do you think we're going lower?
Well, I said we're going lower just because of the technicals. I mean, if you look at, you can just kind of see my chart. We're in a down channel right here. We've broken below these major moving averages, but the thing I'm looking at is also, you mentioned the 60 minutes. So the 60 minutes starting to turn over. Now, the thing that, we're looking at today, so we're measuring what we're saying as far as from, say, today's open. So we're at 20, let's call it 244 on the SPY. Okay. So I think we're going to have a pull down here within the next day or two. And so then possibly a push back up towards the end of the week. Going into the Labor Day weekend. Seasonally, you tend to trend higher in a Labor Day, but I think there's a potential that we could break lower before then over the next day or two, and then from that low, potentially push higher. So we could end up right back where we are, or, down below where we're currently trading now. But just see the FANG stocks also still under pressure. I see that, all the major moving averages the major indexes, let me just pull up one more chart. You can see they're still at resistance and can't seem to get above their key level of resistance, 618 retracements, etc. So if you just look at all the different, the QQQ, the SPY, the Russell's into its 200-day moving average. We'll see if that fails. If that fails there, then I'm really push back down, and you can see the Dow's pretty sideways. So we're into resistance here. I could see us pulling back a little bit over Tuesday, Wednesday, and then start getting to push back into the upside Thursday, Friday, going into Labor Day.
All right. Yeah, I know a lot of folks study the seasonality and Labor Day, holidays, Christmas, election cycles, all that kind of stuff. It's a pretty interesting study. So you're saying that seasonally we go up into Labor Day? Huh?
Yeah, there is a very strong seasonal pattern. So if we hadn't had the Harvey situation, I think that's also demand destruction in Houston. I think that's going to really create a little bit of problems there as far as demand from oil side and everything else that goes with the 4th largest city. So before that, I was going to probably say up, but based on that, and then looking at the technicals here today, and also when you look at the FANG stock starting to struggle as well, I see a little bit more pressure potentially to the downside.
All right. Well, Jim, you gave a couple of your reasons, but if you want to expand on that a little bit.
Yeah, well, I'm just looking at some prices out there, and it looks like there's a range that's been set up a little bit, 24.55 on the upside and about 24.30, which is the bottom of a gap between 24.35 and 24.30. And those are two, support and resistance as I'm reading it. And the market may make a run at one or the other number between now and the end of the week because, again, there is quite a bit hitting the docket here this week. Today we had some news come out, but we've got more coming on the economy, consumer, housing news, and employment. So there is a bunch of stuff hitting the fan here this week that could stimulate people trying to press it towards one of those two numbers or beyond. And again, with the VIX down at 11 or 12, premiums are rather low. So pricing out strangles might not be the worst thing to price out and see if they make any sense.
All right. Yeah, we do have the back end of the week. I noticed that too. We covered that in our trading room, some big hitter reports coming out. I don't know if anybody else has noticed it, but it seems to me over the last few months, the impact of economic reports, even when there's an unexpected report, seems to be less than they used to be. The market doesn't seem to respond, at least in the last few months, the way they do to big deal economic reports like GDP, jobs reports, stuff like that. And it seems like more breaking news, and everybody's kind of waiting for the next big thing. That's been my observation. But Andrew, what do you give a little more depth behind your answer? 55% up.
Yeah, I'm going to try to take the screen here, which I don't really ever do, but let me see if I can share. Am I sharing the screen now?
Yeah, there you go.
Okay, cool. So let me just, I record this just so I can use the tools on Camtasia. So just give me a second. So what I look at is, I call it a triple confirmation system. So this is, I use Ichimoku Kinkin Hoi, and that's my #1 indicator. And what you look at is multiple time frame analysis down here. So the first thing I look at is the daily chart. And we can see the daily chart is slightly above the Ichimoku cloud. If it's above the cloud, that means it's bullish. In the cloud is neutral, and the below the cloud is bearish. So it's slightly above the cloud right here, maybe in the cloud. Then what I have is a proprietary based indicator that I use for all my trading. And this gives me a multiple time frame analysis on one chart very, very quickly. So we see here it's actually in the cloud on the daily. And then we see the 2-day, which is that little green dot, means on the 2-day, if I brought up the 2-day chart, it's above the Ichimoku cloud. Then I have the 3-day, and I see that the 3-day is trading above the cloud as well. And the last one is the weekly chart. So using multiple time frame analysis, we are clearly still in a bear market. The 2-day, the daily in the cloud, 2-day above, 3-day above, and weekly above. You know, the only thing I would say that my conviction is not higher is you see here 3 red bars. Those are known as 3 black crows. So this is actually the 3rd straight day where the market is down from open to close. So otherwise, I would say my conviction was higher, but using those 3 black crows, we've actually seen a little selling action throughout the course of the day from market open to market close. But using the multiple time frame analysis in the triple confirmation system, I think the market's headed higher.
All right. So I use Ichimoku Cloud as well in conjunction with Elliott Wave Count. So I call it East meets West, and I combine them. And so I'm showing a 60-minute chart on the S&P 500, and I'm taking my cue. We had a pretty impulsive move last week, down, pretty strong move. You can see it there. And then we had a retracement into a key Fibonacci area, and it went beyond 61.8, but it stayed below 76.4. So this, in Elliott wave terms, real simple. I look at 3 waves. I don't get onto all these, you know, there's 144 permutations of Elliott waves. I look at 3, right? So we got an impulsive move down. We got a correction to it, and we've got pretty clear evidence of the continuation after that impulsive move. And I'm using Fibonacci extensions, projecting a price range for the 60-minute E-mini down to 24.21 to 24.01. But we've come down and hit the bottom. We're going a little bit sideways for the last couple days, so we're in this channel. And for me to get a higher confidence, we need to break out of this channel to the downside. We need to break through about 24.36, and then my confidence will go up into the 80 to 90 range. We got to do that. We are below the Ichimoku cloud on a 60-minute chart just now, but again, it's been going back and forth. If we go up above this red line, so I'm looking at this blue line, I want to see us go below it to confirm that we're going to head down to the target. If we go up above this red line, take out the previous high, then it's off, and we're probably heading up. So right now I'm saying 55%, and that's going to increase to 80-90% if we get below this key level of 24.36. And on the daily chart, I know Andrew, you showed that. I thought it was interesting, so I want to pull my S&P 500 daily chart over here as well real quick and get that teed up, because I'm looking at something similar. And so here we are, the S&P 500 on a daily time frame, and we are down in the cloud. I use different settings than the factory settings on Ichimoku. I've done some back testing and optimization. So we're pretty deep in the cloud, and if you look, we're deeper into the Ichimoku cloud on the S&P 500 than we have been since the election. So here's the election. And since then, we've come into it, found some support, kept going, but this is the deepest we've come. And we also see on the price oscillator that we've got building negative momentum, and we're losing positive momentum. So this could be setting the stage to break down here and get a bit of a correction on the S&P 500, but that is not confirmed yet. I use Dow theory. I just look, we got a lower low, lower high, lower low, lower high. If we put in a new low down here at about 24.01 on the S&P itself, I think we got us a correction coming, but not ready yet. We're still in the cloud and potential support there, but that's something to watch super close. If we break down again, get a close below 24.01, I think we got us a nice correction on our hands, and that could be a very profitable thing for those who were set up for it and trading to the short side. So that's where I'm at, and kind of my thinking on the S&P 500. So anybody want to add any comments before we move to the next topic, just on S&P 500 direction, maybe what you've heard from the other panelists? Just go free form. Anybody's got a comment, just jump in.
Well, we also have the end of the month coming up here, so there could be some activity, window dressing, that type of thing, and plus the seasonality that was spoken about regarding Labor Day. So those are two forces that that could also come into play, possibly.
All right. Very good. Okay, so let's go ahead and move into the next question. So David always poses an interesting question each week. And the question this week is, what procedures do you use to monitor and evaluate your trading results and progress over time? Pretty good question. So we'll just start up at the top with Larry. Larry, how do you monitor and evaluate your trading results?
Yeah, well, putting your trades together as far as, on a spreadsheet to follow your win, loss, and, your profit per trade, just that kind of setup. And then, also monitoring your brokerage P&L daily and just your chart. So, I mean, the basic thing is just to monitor your trades that you have on your portfolio based on your account balance, your brokerage platform. You can, monitor everything. And then keeping a trading log to see, define what went right, what went wrong on the trades that you did. What was your what was your reasoning for the trade? Was it based on your system? Was it based on some other kind of fundamental factors? Whatever drives your pricing direction that you take a trade for, and then evaluate, every week, your trades, your outcome of your trades, to see what went right with your trade setups based on your methodology, and what went wrong, and then try to improve upon that. So that's kind of the main way.
All right. I sure like the idea of a trading log. I teach that. I think there's an important discipline to actually, writing down your thoughts and results every single trade, even if your brokerage statement's providing the data you want. I think the discipline of making notes about every trade and being able to review it is really powerful. There's something important in that for me. So I sure agree with that. Jim,
well,
how do you?
Yeah, again, with the option professor, we're education, not as much recommending things. So I would say this: my knowledge of accounting software would suggest people, if the numbers are not too excessive for them, to look into accounting software such as DMAX LLC, which has software called the Books. And that software can really give you a nice itemized view on all your trades every day, every week, every month. And it can break it down to micro details. And I know a lot of, there are some professionals who definitely use it. And again, I'm not 100% certain of the cost, but I know that the software is well respected.
All right. Andrew, what do you got going on there for monitoring and evaluating your trades?
Yeah, I think P&L is an important one. Yeah, I mean, everything, I trade unusual option activity. So I watch a proprietary based scanner that shows institutional order flow in the option market. And sometimes it works well, sometimes it doesn't. And then I day trade Apple, Amazon, Baba, Facebook, Tesla, and Netflix every single day. And that has been working better. So, I call it the 3x2, 2x1 rule. And what does that mean is that every trader should try to be making money 3 of the 5 days in a week. Obviously, you're not going to make money every single day. So 3 out of 5 is pretty good. And then when you make money, try to make twice what you lose. So let's say you make, on your good days, you make $1,000 trading. If you do that 3 days, so that's going to be $3,000. Let's say you lose twice, but then when you're losing, you're only trying to lose $500 each day. That's $2,000 a week just by that strategy. So 3x2, 2x a day rule. I agree with Larry about having a journal as well. I used to be in trading like upstairs, and some guy would make like $30,000 in 4 days, and the 5th day he'd lose it all. So it's important to kind of track your performance, what's going well, what you're making money on. Someone emailed me once and asked me about Apple on a 1-minute bar. I said, good luck to you. I can't trade like that. But if it works for you, then stick with it. So trading plan, 3x2, 2x1 rule. Try to make money 3 to 5 days and try to make twice what you lose.
Excellent. And what you just said, I agree with, and it's very similar to what I'm doing. And that is, I'm showing a spreadsheet where I track my trades here in our trading room. So this is Q2 results. In Q2, we've closed 30 trades. Q2 to today. I kind of changed how we were running the room and how we're tracking it. So starting April 1st till today, we've closed 30 trades. And I pay attention to 2 key statistics: win ratio, which is important, and payout ratio. And I think that's very similar to your 2-to-1, Andrew. And that is, when we go into a trade, I don't go into a trade that doesn't have the potential to make more than it could lose. Right? I have a very, very black and white method for where I put my stops based on support and resistance areas, and then a formula for position size, how big of a position we're going to trade based on the distance from the stop to the entry. And then we have a target, and the target has to be, 1.5 to 2 to 3, or hopefully 4 or 5 times the distance to the stop, so that we have the potential for a big winner based on, again, I use Fibonacci retracements and extensions for target levels. So I got to have a pretty big reward potential for a trade to make sense for me. And it's just simple statistics, right? If you have you can be a 50% trader, you can win half your trades, but if you got a 2-to-1 or 3-to-1 payout ratio, meaning your winners are 2 to 3 times bigger your losers, you're a consistently profitable trader. And so my average running win rate's about 65%. In the trading room, we're at about 57, April 1st to date, right? And that's just part of normal variability. But our payout ratio is 2.2 to 1. So in April, May, June, July, August, 4 months, we've increased the account by 25%. A $50,000 account is up 12.9K. So that just shows the power of paying attention to payout ratio. So those are things that I track. And I don't think the brokerage P&Ls represent that accurately. They certainly have the math for payout ratio, but most people have some kind of scale out strategy. Maybe you'll take a full position and scale out in profit, along the way during a trade. And every brokerage platform that I've seen treats those as individual trades rather than grouping them. So that throws off your denominator and your numerator, and so the statistics there are meaningless. Because I view each trade, all the moves inside that trade as one event that I'm measuring. So again, I like key statistics for me are win ratio, payout ratio, and only taking high potential trades. That's really important to me. All right. Well, we're marching through the questions here and getting some good input. Go back around, see if anybody has if they'd be willing to share their favorite pick right now, their favorite trade that they're looking at for the viewers. So back up at the top, Larry, what do you like right now for a trade?
Well, we had a couple already on that kind of already made their moves, but so I was trying to look at some new stuff that you could probably look to get in right now. But here's a couple things that you could look at. Let me just pull this up. You got a minute. So a couple long side trade setups that we had set up last week were ABBV, which has already kind of had a pop, but it looks potentially good, for additional fall through. Got a target up here to 74. So set that one up last week. The great setup was earlier in the week, but got in a little bit late. So we've got a target up here to 74, and have a couple different types of setups on that call spread and a ratio butterfly. And then another one that we set up last week that's already taken a pretty good pop was Gilead. A couple different setups there, but it's already kind of taken off, so it's kind of a little late now to get into this one. But for things that are coming up, the potential pop here today would be BIB, is looking pretty interesting. It's already had a pretty good move, but this potential is for it to move even greater. It's got what we call a volatility squeeze, but you can see it's coming back up to these prior highs. So this has good potential for additional fall through to the upside, and then a couple different short trade setups. Just looking at Baidu, it's starting to look a little bit ugly here. So this is kind of, you can see it's down on this major support, and it's got potential to break. And if it does break this kind of level support here, initial is 218, then next stop down will be 216, and then it could be even greater because you don't have a lot of moving average support below here. So you can see it's sitting right here. This is the 21 exponential moving average, and then after that you've got a pretty good distance until you come into the 50, and then the 100, the 150, 200. And if you put your fib levels in here, you can then get some targets. So I'm looking at that. That looks like a potential short trade setup. And then the other one is actually, some of the FANG stocks. I mean, looking at Amazon, it is sitting right here breaking down, and you can see it's already broken some key support. So this has potential for some additional fall through to the downside. So we were looking at this. The next major target would be down here to potentially around 230. So you've got a 150-day moving average and the Fibonacci extension, the 1618. So it's below all the key moving averages, below the 100-day, it's below its 8. So it's under pressure here. So a lot, a variation of different things I think you could look at.
All right, interesting. Yeah, I like the short on Amazon too. We were looking at that in a webinar I did late last week, and I liked the short setup there. And that's funny you said you're long Gilead. I am too.
Yeah, Gilead looks.
I'll show that chart.
Yeah.
Yeah, I think we're trading different time frames. I'm keying off a daily chart, so I got a pretty good price target and some room to go. But I'll show that when it's my turn. But pretty cool that we're in alignment on a few symbols here. Jim, what do you got? I know you're focused on education, so I don't know if you have any.
Well, I do. Yeah, I have something for you, Dean. Just wanted to give you a little bit of a wider lens, on what I'm looking at. The last 90 days, we've pretty much gone nowhere in the S&P and nowhere in the Treasury note market, and we've seen the dollar drop in the last 90 days and gold rise. I think the deadness of the last 90 days may be quite different for the next 90 days. As I think when people come back here and we start getting into the meat and potatoes of things like the debt ceiling, the tax reform, tax cuts, or infrastructure, or corporate earnings, or whatever, people are going to make a lot more decisions in the next 90 days than they certainly have in the last 90. So as long as we're above 2,400 S&P, 1,350 Russell, and 9,000 on the transports, and again, this is just my opinion, people's case for neutral to higher markets still makes sense. And the reason why, we've stayed so stable, I believe, comes down to the tremendous money flow coming into the indexes and the ETFs, the passive investing, the robo investing, where valuations may not matter because once the money comes in, these guys have to buy stock, I guess. The second thing is central banks seem to be petrified of any asset depreciation. Every time the market belts, they start screaming, it's going to be gradual, our exodus out of QE. And so they are very much not interested in any big drops at all. And of course, again, we got the tax cuts, repatriation money, which people hope will go into buying back stocks. And then the dereg, where about $2 trillion are supposed to be freed up on the balance sheet. So nobody really wants to get out in front of all that kind of stuff. Now, as anything, there's always an Achilles heel out there. And I was listening to Paul Singer, who's a pretty big investor, and he was suggesting that this extreme confidence in central banks could change very abruptly if circumstances would change. And he did think that the leveraging in the global economy is even greater than it is in 2008. And this Ray Dalio is also concerned about the dysfunction in government and stuff like that, which could bleed over into the stock market in the months ahead as well. So, complacency, passive investing, there's a decennial pattern people think that could be effective going through November. And most important to me is there's a huge gap still between 2,500 area on the S&P and my long-term moving averages on the S&P on the monthly, which comes in around 2,200. That's a very large gap that generally, sometimes can get filled in. So I've been suggesting for, a long time now that people investigate using these collars. And, if you've been in the airline stocks or the energy stocks or Amazon, Priceline, Netflix, Google, collars have not been the worst thing to do because you're selling an out of the money call, which will limit your upside to the strike. And you're taking that premium and buying insurance, and insurance on the things that I just mentioned would not have been a bad thing to have in the last 90 days. The banks seem to be a little stalled. So if I was to give a suggestion out there for people is to investigate how collars work so that they'd have some parameters around their equity over the next 90 days and then adjust those parameters as the market moves around. And I guess that would be the main thing that I would suggest right now and have been suggesting for the last couple of months.
All right, very good. I like it. Without a specific stock or index trade, I kind of like the idea of having a strategy and being prepared for a big move. And I think I agree with some of your comments that we could see something dramatic happen. And I think it's important to be ready for that. Not a doomsday scenario, but we're in our 8th year of a bull market. These things don't go up forever, right? And when they go down a lot faster than they go up. What do they say? Stairs up, elevator down. Good to be prepared.
Somebody was suggesting that the passive invest in phenomenon boom that people have just thrown all their money into would actually create more volatility down the road because less shares are going to be actually traded because everyone else is just sitting there. And so with less shares available, some people were saying that the volatility may increase substantially more than we've ever seen. And since we haven't really seen any event to cause significant selling or buying, I guess the jury's still out on that. But that's something to consider as a offshoot of this passive investing boom that's going on, and the velocity of money going into that method of investing through indexes and ETFs.
Interesting. Okay, Andrew, you got a specific pick for our viewers here? Something you like right now?
Sure. So I'm showing my screen now, or can I show my screen?
Yeah, I think you are. I think you're showing it.
Okay, I'm showing it. Yeah, so one trade I have on is I am in Cheniere. Let me just take this thing back out again. LNG, liquefied natural gas, Cheniere Energy. Carl Icahn has a big position in this one too. We've seen institutional order flow in the option market, so I can just bring it up here. So we saw a big buyer of September 42 calls. They bought these a while back, 6,000 of those traded. That was about a $500,000 bet. Stocks trading 41.80. I was in these and I sold these out. So I'm completely out of those. I had nice profits in that one. And the one I'm kind of been trading in and out of, I'm long. October 45 calls in Cheniere. I have a pretty big position. I have about $30,000 of risk here. So Cheniere, 45 calls. They're 70 cents right now. I initiated it higher. I've been adding to them. I've been scalping them. You can see my P&L today is up about $3,700 in this. As stock goes higher, those will go higher. If I looked at a chart of it really quickly, we might have a chance for a bottom down here. It has been relatively weak, and usually I don't take trades that are counter trend, but we see that it pushed against a 52-week low in reverse numerous times. So this was actually a huge reversal bar here on new 52-week lows. Then it tested under it and it found buyers, and I think they can test up to around that $45 level. One thing I always keep an eye on when I'm trading is they call them DTE, days until expiration. So in October, I have 53 days left. Anything can happen in 53 days. So it is my biggest position right now. I like Cheniere, 45 calls for 70 cents.
All right.
The end.
Very cool. And it's interesting. I'm trading LNG as well. So pretty interesting when we have overlap between the panelists. Larry and I had overlap there with Gilead and Amazon, and with you it's LNG. So I'm showing, here's a trade I like, a long trade. This is ACIA, Acacia Comms. So this is a long trade, and this is a corrective wave. So we can see this thing's moved down dramatically from over $120 down to under 40. And now what we see, and again, this is, simple Elliott wave, nothing complicated here. It's just we have a big impulsive move, and after we have a big impulsive move, right, there is a high probability of some form of correction to that move, quite often into Fibonacci retracement zones. And so my retracement zones are these two blue lines. I've got a price target set at the bottom of it just to be conservative. So my price target here is at 70.64, and we're sitting here at an entry of about 48 bucks. And I got a stop sitting down here at the very bottom, which is at exactly 38.49. And so I talked about previously on our other question about wanting a good reward to risk. So, risk is measured on this trade from the entry to the stop, and then the potential reward, if we hit the target, is from the entry to the target. And you can see we got about a 3-to-1 on this trade. And that's what I like, a nice healthy potential reward relative to the risk. And then I use, I subtract the stop from the entry, divide that into 2% of my account, and that's the size position I'm going to take. So if I hit the stop, lose the trade, not going to lose any more than 2% of my account. So that's really how we manage risk, and then 3-to-1 potential payout on that. So I like ACIA as a long, and that's a brand new trade. We talked about Gilead with Larry, and so I'm long Gilead. We're sitting here at about 10% profit on this, which is really nice. I've got a target price ultimately of $86 on Gilead, and it's moving. I talked earlier about Dow theory, right? So higher high, higher low, higher high, higher low, bounced off the cloud very nicely. So we expect this higher high, higher low to continue the target zone, maybe up even above it, because that's the overall retracement zone. So I think there's still room on Gilead to get in, but you see the distance from current price to the stop versus distance to the target. It's getting a little close, so I wouldn't wait much longer for an entry on Gilead, but I still like that. And we're gonna stay with this trend for as long as we can.
Hey, Dean, can I ask you a question?
Ideas. Absolutely.
On Gilead, of course, they did a big purchase of that company Kite for almost like $12 billion. And a lot of times I've noticed that when a company buys a company, the stock actually goes down because obviously they just spent a whole bunch of money. And in this case, the stock is rising pretty well. You have any feelings on that, or?
Yeah, I absolutely do. My feeling is I'm a technical trader, and so the only fundamental data I care about is if there's planned news coming that could be disruptive. So I'm not going to take a trade right into earnings or right into a FDA approval announcement, or if they're in Chapter 11, or if they're they're planning to buy somebody and the deal's not closed, it's going to be announced, or they're going to be acquired and the deal's not announced. Those are huge disruptive events, and so I don't trade into them knowing they're coming. But other than that, I believe in the efficient market theory that all known information about the price, about the company, is built into the price pattern. And so barring any disruptive news that we know is coming that could blow it up, right, I rely on technical indicators and price pattern. That, all the news about who they acquired and what it means, it's sitting right here on the chart in front of us. I joke and, kind of tongue in cheek say, I don't need to go study radar maps and satellite images.
Right.
To know whether I take an umbrella with me or not. I just look out the window and see if it's raining. Right. And in this case, it's a bright sunny day. It's not raining here. So that's my approach. I used to be, I've got an MBA. I know how to analyze companies and do all that stuff. Sure. But I was a fundamental trader for about half my trading career, and found it to be the most frustrating experience of my life. And I've evolved to the point where I believe all the fundamental data absolutely matters, but I believe, again, in the efficient market theory, and it's all represented right here, and all I need to really look at is the chart. Right. That's my belief system in trading. So,
well, I think the news has come into the chart pretty good for a period of time now. Once you started to recognize it jumping up above about 68 there, I guess, huh?
Yeah. And our entry on this, by the way, we got in Gilead back here at 67.70, right, as all my criteria for a trade was hit. We got in on this price bar right before the jump, right, because it broke above the cloud. We had a clear price target. I got about 5 criteria for a trade entry, and it was all met on this price bar before here. So we're in nice profit, and we think it's got room to run.
Yeah, I had just heard that they were sitting on a ton of cash, and obviously they spent some of it on this purchase. And I think obviously the people are saying whatever they spent money on was not a bad idea.
Yeah, they've got a
That's
huge
what it
cash
looks
hoard, and they were kind of criticized for not spending money to,
Right.
increase their growth. So I guess
Right.
this looks like potentially that company that could expand their growth. Yeah.
Right.
Yeah, I used to work for Intel. I worked for them for about 14 years, and they got a treasure chest. And while I was there and afterwards, I pay attention. They must have done 20 M&As. Not a single one made any kind of material difference. They spent billions. Unbelievable. But that's a side note.
Yeah, these guys that they bought, I guess, have a cancer drug that's pretty well respected.
Well, at least that's in their core competence, right?
Right.
That makes sense. Absolutely makes sense for Gilead.
You
Okay.
can see,
So, yeah, go ahead.
I was just going to say, getting back to Gilead, I mean, just looking at the chart, you can see when it broke that 200-day moving average, it really started to accelerate. That was back when you were getting in July, right at around 70 and a half, and just had a really good cycle push to the upside.
Yeah, absolutely. And the moving averages are related to Ichimoku Cloud. Ichimoku Cloud's based on the same idea as a simple moving average. It's just calculated from the highest high, highest low in the number of bars you look back, where a simple moving average is calculated by the average closing price. So a similar approach, and not surprising that when we would see a break on a moving average that's looking back a similar number of periods, that we would see on the cloud. I like how the cloud projects a range rather than an absolute value, right? The cloud is projecting a support range area versus an absolute line, and I've found that over time to be very, very powerful, and I use it with confidence in my trading. All right, we're at the very last part of the show. We just got a few minutes left, and what we do now is just go ahead and wrap it up, and that's go around the room one more time. Any last closing thoughts, and if there's any link or web page or something you'd like to have the viewers check out. So Larry, if you would do your last thing there and wrap it up.
Thank you very much for having me again. Just take a chance to go to PowerCycleTrading.com. Got a lot of free good information here, and check us out. And primarily directional trading using options for leverage and better risk management. So check us out, PowerCycleTrading.com. Thank you for having me.
All right. Hey, glad to have you here and appreciate your comments, Larry. Jim.
Yeah, basically, we have optionprofessor.com and optionprofessor@gmail.com. And, basically, I would suggest, as I have been suggesting, that people investigate a few different strategies and get aware of how they work. The strangles, two-sided trades because of the premiums being very low, and then pricing them out where they go through the end of the year and see what you think. And then, of course, the defensive strategies such as the collar strategy, as well as the married put strategy, based on the upside having been rather limited lately, and the premiums being rather low on the put side. And then again, pricing them out over various time frames to see if any of these strategies might make sense.
All right, outstanding. Thank you, and it's good to be on the show with you again, Jim.
Thanks, Dean.
Yeah, Andrew.
Yeah, email address is andrew@alphashark.com. As the market is, in my opinion, is getting a little bit slower and boringer, I've been trying to pivot myself into other areas. And one thing I'm really working on that will be developed within the next couple of weeks is cryptocurrencies. They are currently a $130 billion market, between Bitcoin and Ethereum being about 67% of the market. I think there's huge potential upside in the cryptocurrency space. And I'm going to be launching trade alerts, boot camps, and courses on cryptocurrencies, why trade them, how to trade them, because I think that industry, which is 125 billion, can go to $1 trillion in the next 5 years.
Wow, that's interesting. I keep hearing about cryptocurrency, and it's got my interest. I don't want to trade something I don't understand, so it's cool. I bet there's a lot of people just like me, Andrew, who are very interested. So if you're providing education, that's awesome.
Yeah, it's an interesting thing, because from my point of view, I kind of almost look at it as like a binary event. Like, with Bitcoin to $4,000 is actually less risky at 4,000 than it is at 40 because it's more socially accepted. And every single day it's getting picked up by more companies and by more countries as well. It's almost kind of feel like a hedge against the stock market, because I think we always talk about the stock market correcting, and we've gone the longest in history without a 10% correction. The stock market is going to correct at some point in time. And I think the flight to safety, which used to actually be gold, will be cryptocurrencies, because one of the facts is the Federal Reserve can never be audited, so they can just print as much money as they want. And a peer-to-peer system using the cryptocurrency space and Bitcoin is not going away, and it's just going to excel. So can it go down 75%? Sure, it can. But I think the potential upside, as we all talk about reward to risk setups, the downside might be 75%, but I think the upside can be 1,000%. I think it can tenfold.
Wow, that is super interesting.
Yeah, I got a quick question for Andrew on this, because I obviously don't know much about it to any level. Is it possible that all the printing of money and issuing of debt and all the paper going around, from the ECB to the Bank of Japan to China to the Fed, could it be a situation where there's a blow off on paper money, and then rather than a one world currency or some type of a change of unit of measure, that this Bitcoin could be a replacement for settlements down the road if the paper just got so crazy?
Yeah, I mean, absolutely. I'm maybe more of a skeptic and maybe of conspiracy theories. I think at some point in my lifetime the U.S. will not be the powerhouse of the world, because the fact of the matter is the U.S. government is in trillions of dollars of debt, and we can't just sit here and shove money and bonds down Japan and China's throat till they basically throw up. At some point, China and Japan's going to be like, we're not buying any more of your bonds. The fact that Trump basically said, if you don't buy our bonds, we're not going to take your imports, is where he kind of stands. So China is kind of has to take our bonds. But I totally agree that basically the government it's corrupt and it's skewed. And you look at cryptocurrencies, and you could say a lot of things. Gold. What is gold worth in the world? Well, gold's worth what one person's willing to pay and one person's willing to sell it for. They really don't have any industrial production. I mean, they're using Indian weddings, but not really created anything. Diamonds aren't a rare stone. If you want a rare stone, go buy a ruby. So these things like the cryptocurrencies, and I'm actually going to be starting a hedge fund. They are actually classified by the SEC right now as a commodity, not a currency, which I think will change over time. And I think the more socially gets accepted, the higher it goes. So yes, it is a huge hedge against governments just printing as much money as they want, because at some point that's going to bite us in the butt. I don't know when that's going to be, but I think that Bitcoin and cryptocurrencies can, take over as a huge major currency of the world. Got to be really careful with these markets because they're new and fresh. Okay, I'm coming off.
Yeah, I'm just saying it looks like the internet of currency if you look at it from a different angle.
Yeah, I mean, the internet was the biggest thing ever, right? So this is
right.
Current internet.
All right, I'm just saying, is it possible that the cryptocurrency is the future of cash settlements, like communication? The internet was the future of communication. You know what I mean?
My short answer is absolutely.
Yeah.
Yes.
Interesting stuff, man.
Very interesting stuff. Absolutely. David, you should assemble a special panel, a one-off show to talk about cryptocurrencies, man. I bet there's a ton of interest in it. So just an idea there.
Yeah, I think I'll see what we can do with that.
Yeah. I bet you could get a ton of people to come hear about that, because there's just a ton of, you just keep hearing stories and discussion, and it's just that emerging thing that I think people are really intrigued by. I sure am. All right, hey, I'm Dean Jenkins. Follow Me Trade. This is my website, followmetrades.com. And kind of my sweet spot, my flagship deal is I'm a stock picker, right? And I trade the stuff with my own money. And here's my my resume, how we're doing year over year. Not promising anybody to get rich and become take 1,000, turn it into 1 million in 2 weeks. But we're getting solid returns year on year. I feel very strongly about providing very clear transparency. So there's a list of every single trade we took this year, and actually getting this audited by a CPA, and they're going to be putting a stamp on my website that my results are audited and verified. I think that's important. And I publish a weekly newsletter that's free. So if people are watching and are interested, maybe that's a nice toe in the water, is just sign up for the newsletter. Weekly newsletter where I give an outlook on the market, what's going on with the indexes, gold, oil, key commodities, and my take on where we're going and what to watch for. So that's it. Hey, great to be here. I enjoyed being here with Larry Gaines, Jim Kenney, Andrew Keene, and thanks again, David, for putting this all together and for inviting me and the rest of the panel to be here. Good stuff. And turn it back over to you. Thanks.
Yeah, great show. Thanks, guys. For everyone watching, just want to remind you to be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to watch for more info about the upcoming episode 2 of Analyze Your Trade, which will be September 5th at 9 p.m. Eastern Time. Dean, did you want to say anything else more about that?
Yeah, that was, it was a good pilot. We got a lot of great feedback. So the Analyze Your Trade is a different format than this. We take input from the viewers and we analyze your trades. Whatever your trading ideas are, we'll have a panel of experts with different approaches. So you get to see, a vast spectrum of ideas. But, you type in your symbol, hey, I'd like to see about Apple or, Facebook or, some other more obscure stock, and you get to hear 4 experts give their opinion on that and share their favorite trading ideas. So it's focused on stocks, but the first one was well received, and we're planning again September 5th to do the next one. So watch your email for an invite to that. Really looking forward to it.
Yep. All right. Yeah, and just want to thank my guests again for this week. Larry Gaines of PowerCycleTrading.com, Jim Kenney of OptionProfessor.com, Andrew Keene of AlphaShark.com, and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.
Thank you, David.
Thanks, David.